Okay, here we go. Hello, traders. We have a great guest today. Adam's going to be coming in here at the end of a month or beginning of a month because his seasonal work is excellent, and we're fortunate to have him. Welcome back to TradeGate Hub, Adam.
Thanks so much, Dale.
It's great to have you here, and I know it's not July yet, and you have a holiday in Canada tomorrow, and I take every day off. I change religions to get extra day off, whatever it takes, because we need to recharge our batteries. So I'm curious what we have brewing for July. I was reading, and I wanted to get your viewpoint that July is seasonally a very good month for risk in equities. Is that what you're?
Well, that's true. So for the stock market, the S&P 500, or if you take UK stocks, less so in Japan, it's a very consistently good month. So it's one of the more reliable. I think it's the fifth best month only over the last 20 years overall, like on average, sort of positive gain. But if you sort of strip it back, I think it's 10 of the last 12 years it was higher, and 6 straight I think we're working on now for July. So it tends to be a positive month, not necessarily a blockbuster month, but a reliably good month for stocks.
Okay. So on your radar for seasonals, what stands out to you?
Well, what's interesting though, generally you could say, okay, it's good for stocks. You'd say it's good for commodity currencies, maybe negative for the yen. There isn't that follow through to FX that you would expect from this. So you have the dollar index, for instance. You take it over the last 20 years, the average change is precisely zero in the dollar index. So there isn't a strong signal there. And if you look at the commodity currencies as well, it's very small in terms of a move that you would expect to see this month. So if you drill down into, currency by currency, there isn't a lot that you can see in terms of a seasonal bias. So, you really have to go up beyond that. It's a very good month for copper, which sort of fits into that risk. I think it's the second best month for copper. It fits into that sort of risk tone, and we've seen a bit of weakness there. Elsewhere in commodities, it's a weak month for natural gas, which is sort of an interesting trade here right now because we're riding very high in gas.
Yeah, everyone is calling it a breakout. So that would be a surprise. A lot of people talking about it last week, and natural gas on the verge of a breakout. I believe that occurred. So it'd be interesting to see if we could negate that breakout during a weak seasonal month. Is it because natural gas is in higher demand during colder months, not used as much for cooling as it is for heating?
It's a very interesting market. It's very seasonal to begin with, right? And that's because of seasonal demand. And now you've taken a lot of power plants are transitioning or have transitioned from coal to natural gas. Okay. So now when you have a lot of cooling demand, you need that natural gas as well. But generally at this time of year, they're building up storage in natural gas, and then it's drawn down in the winter, where the majority of natural gas is used for heating. So right now we're like inventories are still, they're drawing down at this point, but generally they'll be rising throughout July and August, and then sometime around October, November, you start to get the draws again. Once it's is a very reliable signal for October in natural gas season, because you get that first cold snap, and then all the buying just comes. The first cold day in New York, you can usually bet the house that natural gas will be up. But what's especially interesting about natural gas is kind of back to where it was in 2017-ish. If you zoom that out, towards the old highs. But if you look at the last decade, you see all those highs, those spikes. Yeah, they all come in the winter. See January on that one. And if you go back, it's always in the winter. So I think you have to go all the way back to 2013 or 2011 to get any kind of summer spike. And even then it wasn't, sort of huge. So 14. No, that's a winter one there as well. So this is a very kind of counter seasonal spike up in natural gas. And I think where it really bodes well will be into that October. As if there's any kind of a cold winter, then supplies will be drawn down, very, very quickly. And you also have to remember on the supply side, natural gas is generally, or you can think of it as a byproduct of oil. So there's much less oil drilling going on in the US and Canada right now. So there's less gas coming into the market. Now that might change with prices where they are, but there's a lot of caution in that sector in terms of drilling. So that I think it could be a big move is shaping up, and I would use any July weakness or really into October or September, August area to get into natural gas longs, probably by producers rather than the commodity itself, though.
All right. Well, you were definitely real right for several months about the price of energy. And we have had doubling of prices since October, Adam. And, I talked to Mark Chandler earlier today, and Mark gave me this statistic that every time the price of oil doubles, we have an economic slowdown in about 6 months. He's talking like sometime in the spring of next year. Does this move in oil continue? Is it due for a respite? Anything seasonally there, or is it just going to trade higher with risk and continue to do so?
Right towards the end of the year, there's generally a very weak tone in oil. You do tend to get a spike in August, September, and that's the old, like if you look at the seasonal trends in oil, it's the old hurricane trade, right? We used to have so much production getting blocked out of the US when the hurricanes would ramp up, but now the US produces so much oil that it's not importing as much, so it's less of a factor, but there's still that knee-jerk sort of reaction in the market. So, if we look back at 20 or 30-year seasonals, I would caution that they're around that hurricane time of year, they can give you the wrong impression. However, I think we priced that in earlier and earlier. So I believe there's a good trade to buy oil in sometime in August, ahead of when the storms are starting already, which is sort of worrisome, but the big ones don't start until August. Normally, at least anyway. So I think there's a good trade to buy. I think we could get a pullback, but OPEC is tomorrow. All the talk is 500,000 barrels additional for August. And if that's all there is, I think it can run and can break out here. If not, you can see that chart. This is sort of a natural. I think that 76 is the top there. We've got incredible run. But saying that, I'm the guy who wants to buy at 69 or 67.
So you'd like to see any pullbacks would be a buying opportunity for you. I mean, we are getting some, non-confirmations on, some of the work I do. It is starting to look heavy, and we had this initial break, and we tried to trade above 74, and this might be a timely discussion with the candle I'm getting right here on the 4-hour.
Oh, that's right. Even today we were up $1, I don't know, an hour ago, and now
giving it back unchanged to lower now. Adam, I just want to circle back to the dollar, and even though you don't have a lot of major seasonal signals here on individual currencies, what's your take on this bounce that we've had in the dollar since the Fed? Does it have legs? I was thinking that perhaps we get a rally back towards this 95 level. On the weekly, that's a major resistance zone right up here. That's where we had the major breakdown after COVID. Do you think the dollar has legs up to that level, or no?
Yeah, no, I look at the data. I mean, first of all, I think this last 3-day rally is very much quarter end flows. I mean, there's nothing, especially against the commodity currencies, against some of the more risk bent trades. I mean, we had highs in stocks the last 3 days, yields trending down, and the dollar moving up, which is the opposite of what you'd expect to see. And so I think some of that fades, but it's all about the data. Consumer confidence this week was very strong. And we have non-farm payrolls coming up. I mean, ADP was a little bit on the high side today. But I think, the jobs report, it will be pivotal. We missed a couple in a row. You could easily beat 600K consensus on Friday. And And then I think, the dollar can run with that. And I'm tempted to fade this dollar move, but you can't do it until non-farm payrolls. But if it is in line, then I think, yeah, I'm a bit more inclined to fade it, except against dollar yen. I think that's the one spot where I think the dollar can really run. The euro, I mean, I'm waiting to see a bit more data to see how things develop there. And I'm really, really in data watch mode right now. I don't
Okay.
have a strong bias in anything, right? And that's sort of typical of the summer. I think we've carved out some ranges. It's
Yeah.
July. You don't really
We're
look
in
for
the
big.
dog days now, huh?
You don't look for. I mean, generally you get those breaks in August, right? Which is going to around the time of Jackson Hole. But we'll see. I think if you get through non-farm payrolls and it's no big deal, then it's going to be a range trade for most of this month, and then we'll take it from there and see what it rolls in.
I wanted to ask you, with the last Fed meeting and the last Fed statement and the Fed really doing nothing. I mean, it's all jawboning, right? For us to have $100, $110 break in gold in a matter of days, for us to have a big break in silver, $2.50 after the Fed statement. What's that tell you about the character of the market, that just
I,
jawboning
yeah,
can create such a fairly massive move in a short period of time without any Fed action? Just the hint
yeah.
that someday they may begin to taper.
I mean, it's not pretty. It broke down. A lot of things got caught out, right? There were some short squeezes right after the Fed. We saw some overshoots in FX, equities, and even bonds, especially, really. And a lot of it bounced, right? And a lot of it's largely erased. And then you look at gold and the bounce and silver. It's
Yeah,
just an absolutely feeble bounce. And then yesterday it cracked again.
yeah.
Now and again, we're back below that 1760 in gold, which is the level I was watching. And so, there's nothing too complicated about that. It was just really around that old low from last week. And it looked like it might pop back above yesterday and then faded again. And now we're soft again here today. And it's, I think that price action says a lot right now.
Yeah, I recall people are kind of surprised that I can remember what people say and what their views are or trades are for such a fairly long period of time. But I recall a previous interview when I asked you about gold, and it had a little pop after that. But you said, Dale, wait for August, and now that's looking to a great advice, because you didn't get caught being long, and maybe it's going to take another month or so for gold to find its footing. So your instincts, or maybe that's a seasonal. I've heard that July, August are normally good months for precious metals, but I've also seen lows in August in the stock market, and perhaps we have really one market here. I want to
yeah,
talk to you about this. Okay. So, we had COVID, right, Adam? And S&Ps went up and gold went up before this, right? So you had nice rally in gold. It's given it back. The stock market hasn't given it back. Crypto went up. Everything went up. Isn't it all one market and really spinning around the dollar? And the only difference is the magnitude of the moves between different asset classes and instruments. But it's almost like the markets all breathe in and breathe out at the same time, depending upon what the dollar is doing. Am I
yeah.
reading it
The
correctly?
dollar in the Fed, the dollar in the Fed, and it is, and it's the inflation. The inflation ties back into it now in bonds, and I think that the trade is so conditioned to buy the dip and risk.
Yeah.
The dollar, it can disconnect a little bit right now. It looked like it might be the low yielder, but it can disconnect from the yen and the euro. And I think there really is an opportunity there where we see dollar yen persistent bid and a lot of things against the yen.
Okay.
To wrap up your thought on gold, just the single most reliable seasonal indicator is buying gold in December. December 1st, buy gold. So,
Okay.
I'm tempted to really go all in on gold until then, but there are some tailwinds, but I don't love it until maybe 1700. But we'll
Okay.
find out, right? If
Yeah.
inflation does prove to be transitory, then gold is a home run, because rates will stay low. So, um, and the fiscal impulse, I don't think is going away. I was thinking through the next few years, and if we have, sort of almost the outlying scenario is a return back to say 2.5% Fed funds, and then everything just normalizes around there. Um, and you kind of have to revalue a lot of things based on that, because you get decent yield, I guess, in bonds again. But what happens to fiscal spending in that scenario, right? Like maybe you might have a slowdown in housing in Canada, at least. I'm very big bull on US housing, but then you can still have that fiscal impulse, or does austerity kind of creep back in because government borrowing costs something again? And that's really where I'm trying to look right now. It's the inflation trade is such a tough one, and I just don't see any reason to pile into one side or another right now. I think inflation will normalize back at low levels. I get what the Fed's saying. But you look at wages again, and it was interesting with survey. There are a lot of people looking for work, but they're just being very choosy. And I think that's sort of the theme that people are going to grasp onto in the next little bit is you have whatever it is, 7 or 10 million workers in America looking for jobs, but a lot of them are still getting benefits. And
Yeah.
they don't expire till August, September. And you say, listen, I know I'm going to go back to work, but I'm not going to go right now unless the job pays a decent wage. So
Right.
you have this sort of backing, right, where you can just stay home and keep shopping because there's time sort of on your side. But then it obviously flips come September. And the Fed, Barkin was talking about it yesterday, the Richmond Fed president, saying that's when they think there's going to be a lot of job growth because people are going to need the paycheck again, and they might have to take that $12 an hour job.
Yeah.
That they're
Politicians have been downplaying that wasn't the reason people are staying home and not looking for work. But I don't know. Money is where the rubber meets the road, buddy.
and childcare is a big thing. Now school will come back in
Yeah.
September, right? If you're off now and you're still getting paid, and yeah, maybe it's a bit less, you say, well, I'll wait till September, the kids go back to school, or August, and get back on it then. So what might happen though then is you get a Jackson Hole where the Fed stays pretty patient still in August, and then you get just amazing jobs report for August and then September.
Then
And
they
then you
look
get them kind of playing
wrong-footed.
catch up, and then you get something like dollar yen really taking off, something like that, and you might get a little ugly bent in risk, although September, October is generally a pretty good time. But
Yeah.
that makes a lot of sense to me.
I want to ask you about yield since you've been bringing it up. It's a tough call here, Adam. I keep flipping. I have to, take a victory lap last year looking for higher yields. But since we entered this period here, at first it looked like we were going to make a move after the Fed. Was the strangest action. So here's the jawbone. And then by the close, we were even at lower yields
That
and
was
tried to
such a squeeze.
recover. To me, it looks like yields want to go lower here, at least temporarily. And this would still just be a marginal correction from the big move that we had from the COVID crash. And even if you take it from this low at 50 bips, we tripled. So why can't, and this has been more of a correction in time than price. Where are you at on yields? So do you
Well,
think we could still
when I go
work
back to the
lower
Fed,
here?
I believe the market was very short, and I'm
Yeah.
utterly convinced that was a massive short squeeze. And then we've had this pop. We had a pop back up, and now it's drifting lower again. And I just look to quarter end here, month end, as flows, really strong bids here in bonds.
Yeah.
And I
Here's
think this
TLT.
might, I'll be
Yeah.
again, non-farm payroll is going to play into it. But I mean, if they're strong, I think short bonds is probably as good of a trade now as you might find. But then you have the bond market kind of signaling this policy mistake from the Fed, right? Whereas you might
Yeah.
get, after we saw from the FOMC, oh, they're going to hike rates. Well, I'm
Yeah.
going to buy bonds because it's the wrong move, because that's going to kill inflation again. And this
Right.
is kind of, then you go back to the Yellen Fed or the Bernanke Fed where they hike too early.
Yeah,
I
they're
mean,
not omnipotent. I can remember in my career, Greenspan staying tight too long cost the first President Bush's the election. They're not always Correct.
Correct. Well,
They're professional guessers too, don't you
well,
think?
I think, well, generals always fight the last war.
Okay.
And we're fighting the financial crisis again. They want to redo on the financial crisis. They wish they would have governments wish they would have spent more, and central banks would wish they would have kept rates lower for longer. But this
Yeah.
isn't the financial crisis, right? There isn't the scars of all these people losing their homes, or seeing banks collapse, and all this uncertainty and the layoffs. It's something that people can very much comprehend. Okay, the pandemic is on. We all have to stay home. Pandemic's over. We've got pockets full of cash. Everybody's hiring again. And so I don't think there are scars coming out of this. I think it's very clear right now. So it's a different recovery, and that's why I'm very bullish on that side of it.
Okay.
And so for yields, I think they should go up. But if you get the Fed hiking too soon, which I don't think they will, because they are fighting that last war, you get hints or you get a taper, and I don't think even the taper itself will be a very big deal. And I think that it's going to be I think the playbook we saw from the Fed is the playbook for the next year. They hinted tapering, or they taper and you buy the dip, and you fade whatever move happens, because this taper tantrum psychology, again, that's traders fighting the last war there. And and so until the actual rate hikes start to dig in, maybe at like 1%, which maybe it's 2 years out, maybe 3 years out, I think there's a pretty good party going on unless inflation kicks off.
Okay.
So, there's a long, long runway for thing like dollar yen or any yen cross here. Risk trades, as insane as valuations are already, they'll go higher, I think. And then commodity prices. I mean, I think oil, this is just the beginning. Yeah, there's going to be a slowdown in 6 months, but isn't that baked in? I mean, you're running at like 9% growth right now. So
Yeah.
anything less than that counts as a slowdown. So, that's certain.
Okay.
And then, the discipline is there for the drillers. And then you look at things, copper, there's just structural supply deficits in some of
Why
these.
is China selling commodities? Why they want to put a
Yeah.
lid on commodity
I mean,
prices?
they
Any idea?
dominated the commodity market for the last
So
10
why are they
years.
trying to pressure prices to the downside just to accumulate more at better levels?
I think this is why they accumulated it. They accumulated a lot at cheap levels smartly, and
Yeah.
now they're trying to bully the market a little bit because their phones are ringing off the hook from manufacturers, producers saying, "Listen, this is killing our margins."
Yeah.
We weren't planning for copper prices this high. We were just locked into these selling contracts. Help us out. So they jawboned a little bit. Then they come out and sell. I think it's 20 tons was their first sale, which
Yeah.
copper rallied off of because it's not that much.
Small. Yeah.
But if you look, it's EV demand, right, and infrastructure demand, so that takes away the impetus from China, right? This isn't just China building China
Right.
anymore, China exporting things. It's, American domestic demand, for copper, and globally as well. And so, you're getting a signal from that, and then steel prices haven't come off an inch since the highs, and that's a market. It was interesting, about 3 months ago, U.S. Steel, they
Yeah.
had kind of long planned this expansion in Pittsburgh at one of their factories, and they came out and I don't know if it'll be on there. It'll be hot rolled steel somewhere, or U.S. Steel itself.
Ask and you shall receive. So there's
You
U.S.
got it right on
there.
your ticker
All
already.
right.
So we got another steel man here.
Yeah. So
Um,
you know, uh, iron has to, because we're steel, Adam. We had to go through the fire as
right.
iron to become steel. So, I look at this chart and it looks heavy to me. And I wanted to ask you, you're a great fundamentalist, but I know you're also an excellent technician. And I've been showing this VIX chart to people, and I'd like your impression because it reminds me a lot of what silver looked like before the bottom. You see all these wicks that we're getting
Right,
here,
right.
Adam,
Couldn't
and
agree.
it's like, it probably never even traded down there. And before silver bottom, they'd open at 40, 50 cents lower, and then in an instant, it would be unchanged or higher on the day. And we're getting all these wicks. To me, smacks of some accumulation happening here in the VIX. And you talk about margins, right? So is there a chance that there could be margins or earnings compression based upon the input costs that a lot of these corporations have that could make their price earning ratios not as good because they have to pay up for everything.
I'm thinking about that a lot. It was interesting. Housing, they had earnings after Q1, and they're whining about lumber prices, right? And they've been high, but like you had KB Homes and DR Horton both said their margins were at records. So I was sort of
Wow.
fascinated by it. But that's 20% price increase, and you can charge market prices. And I was listening to Barkin yesterday, to mention him again, and he said, companies really are, even when they have pricing power, are loath to raise prices. He said, you've got your whole sales team there, and they're probably paid on commission, and they're doing really well. And then you got to tell them we're raising prices, right? And there's sort of a boom time for them, and so they don't like it. And then you got to go to your customers and say, hey, listen, we're raising prices. And they can shop around. And he said, with the internet right now, it's not just me and you shopping on Amazon. It's companies can shop around, and so they don't really want to lose the market share because maybe they believe that their bottlenecks are going to come out later.
Okay.
And until that psychology changes, if you say, listen, I'll just build market share right now. Because I think, I'm still, my margins, yeah, they might come down a little bit. They go 10% to 8% or something like that. But I can deal with that if I think they're going to go back to 10% or 12% even once these bottlenecks ease in the next 6 months. But if you look at the surveys, almost half of companies think these will last longer than 7 months.
Yeah,
then the psychology might start to change, right? You say, okay, yeah, 1 quarter, you can come on the conference call and say, yeah, my margins were a little bit compressed, but we think it's going to come back. 2 quarters, 3 quarters, you say, hey, listen, somebody starts raising prices, and then everybody starts, and that's then it becomes that cycle and inflation.
It's an advertising theme now, Adam. I'm seeing ads now on television where they say, whatever the product is, buy it now before our price increases kick in July 15th. So to get the old price, you have to do it now because there are going to be, that's a new advertising angle for people. Buy now before prices go up. Have you seen any of those
Yeah,
ads?
and it's very bullish, right? It's very bullish, at least until the Fed says enough.
Yeah.
Right. So like inflation is really, it's good, especially if it's, relatively sort of, not a painful level of inflation until the Fed says, all right, we're hiking rates. So
Okay.
I feel you on that. And I think that sort of on the VIX itself, I'd like to see a sort of washout. And I think a lot of people are looking for it too. One sort of spike, one big dip. I mean, everybody's always looking for that big dip, that 6% correction like we had last June, and get back in and one more spike in the VIX. But that's sort of, I don't
They're
know if
not
it
letting
ever
people
really
buy
comes.
it at 14, Adam. I'm guarantee if you had an order in to buy it down here, you didn't get, you got an unable. Okay. You probably got an unable. So I do want people to know how to follow your great work. And I pulled up your website. So anything new happening at
Yeah, we've got this
Forex Live?
education. We got this education hub now. You see it just on the
Oh,
right there, and so it's a lot of new educational content that we're putting out there. We're trying to educate traders as well, and it's sort of live. You need to register, so it's sort of like a virtual room, and we're going to do a lot more with that. We're working on lots of changes to the website, but mostly we're just cranking out the content. And growing the audience, and yeah, things are going well. I mean, when markets move, it's a place you dial into to see why. And that's how we roll. We figure out why the market is moving, and talk about where it might go next, and what news is coming up. We're really heavily news driven. So when news is happening, we're busy.
well, all FX traders are glad that you didn't stay in purely as a journalist a few years ago,
Same,
and that
likewise, Dale.
and that you came,
A few more
you
years
came,
ago.
you came, yeah, about a century ago. Me too. So anyway, that you are one of the best at interpreting the news and giving actionable ideas based upon fundamentals that are developing. And I want to thank you for your giving spirit, Adam, over the years to come in and edify the communities that I'm moderating or facilitating, and really appreciate you giving us your time today, and hope that all things are green for you the rest of the summer, and look forward to having you back at the end of July, early August to see what's on your radar then.
Thanks so much, Dale. Thanks. A pleasure to be here as always and chat with you. And yeah, I think August gets a little more interesting on the seasonal front and everything else, and then really into September. So have a great July.
Okay, everyone, Adam Button, could find him on Twitter at FX_Button, find him at Forex Live, or go to their website. And as you can tell, I have a lot of respect for Adam and appreciate him being with us today. So people thanking you, and really, thanks so much. Have a great holiday tomorrow, Adam. Don't get up, sleep in tomorrow. That's an order.
You got it.
All right, buddy. So that's a wrap, everyone. We'll see you tomorrow. Good hunting the rest of the day.